All right, in this session, I'm going to discuss the preparation of financial statements. They actually don't do a very good job of that in your book. So let me get this screen shut down here so that you can have a better view. I don't know why they spend so little time on it when it's such an important feature of accounting. I'm having a hard time getting the thing to stay close. Okay. So I'm going to go through these slides step by step, beginning with the steps in the accounting cycle. I've been working you through these steps for the whole time we've been in class. And the last recording I did was on adjusting entries. And so now the 7th step is preparing financial statements. Right, and in this class, I would prefer that you do financial statements without the worksheet. You can prepare them directly from the adjusted trial balance, and I think it makes a whole lot more sense logically to do that. These worksheets that they show you in the book were designed before there were computers, basically. You did it all on paper, so you'd have this checking mechanism and all of that sort of thing, but it's not really necessary anymore. So I'm going to illustrate preparing the financial statements directly from the adjusted trial balance. In the very first lecture on the fundamentals of accounting, I talked about the different asset classifications. I think now you all know about these classifications and the types of accounts that go under each of those. That's just a reminder. And the reason I put it up there is because in the next slide, I basically show you how these different categories fit into the financial statements. And what you can see here is the last two classifications, revenues and expenses, the very two bottom ones, are your first financial statement, the income statement. First thing you want to know if you're running a business is if you're making any money. And so there you use revenues less expenses and come up with net income. The second statement you have to prepare is a statement of retained earnings for a corporation. You look at what you had in your retained earnings at the beginning of the period. Excuse me. Add net income from the income statement, because you don't get income from over here. There's nothing over here that says net income. So bring that in here. Take out your dividends, and now you have your ending retained earnings. Everything else in the asset class, in the account classifications, assets, liabilities, stockholders' equity, all go on the balance sheet. You take your assets down, your liabilities down. Now what we want down here is the updated stockholders' equity, which would include the updated retained earnings. So that gets moved down here into the retained earnings down here, which is part of stockholders' equity. Let me go, and there is an example on page 17. I don't know if that's the one I have coming up next. I also did a memory tool for you saying these are the things that go on the financial statements in case you forget. Revenue, expenses, so it's Rennie, Bide, Ale. Just a simple memory tool that if you would have to take a test and you don't have time to look these things up, if you can remember Rennie, Bide, Ale, you can probably put it together. Of course, revenue less expenses is net income. Beginning retained earnings plus add net income minus dividends gives you ending retained earnings, and assets equals liabilities plus equity. And you see how the net income flows into statement of retained earnings and how your ending retained earnings flows over to your ending equity on your balance sheet. And here's an example that I pulled out of the book to just direct your attention. You will see here I don't know what page, I don't know if this was the page 17 I was referring to. I did that much earlier. But you'll see your income statement items here. Come up with your income. This happened to be a net loss, by the way. You had more expenses than income, so you had a loss. Where's this one? No, this one's income. It's another one I'm going to show you is a loss. Net income, that goes down here and gets added into retained earnings. Gives you your ending retained earnings. Ending retained earnings comes down here and goes into the retained earnings on the balance sheet. Now, one thing about, let me back up, one thing on these items back here. You always start with the bottom items for your first financial statement, and then you use the middle item for the second financial statement. Then you use the top items for the last financial statement. That's one thing that'll help you if you remember those. Secondly, these things can only be used one time. All the accounts under there can only be used one time. That's why you have to carry these numbers over here. You can't use revenues and expenses again in here. You have to use net income, which comes from here. So remember, you can never use an account twice in financial statements, only once. And you'll see the evidence of these here. You'll see all your revenues, expenses, etc., and how they flow down. Okay, and I created I pulled this in from, I think it's in your book. I'm pretty sure it is. Here's an adjusted trial balance. And you know what this is now. You prepared a trial balance at the end of your last problems that you did, and now this coming week you'll be working on adjusting entries. And after you put in your adjusting entries, you'll have an adjusted trial balance. Just means a new trial balance with the adjusting entries in here. From this, you do the very same sequence that I just showed you in the previous pages. Start at the bottom. First thing you do is move your revenue up to the income statement. Move your expenses up to the income statement. By the way, this is a subtotal category here. There are no debits and credits on financial statements. This is a subtotal column of all the expenses, and here's the total of expenses. And this is done this way for clarity. If you're looking at financial statements, it's nice to be able to see the expenses, the revenue versus the expenses, the relationship. If you have all these numbers sitting over here, it's not as easy to get that picture. So in this case, we had revenues of $9,200, expenses of $12,000, so we actually have a loss, not an income. We have a net loss this time of $2,800. This net loss comes down to the statement of retained earnings, which is the same thing as stockholders' equity. So it's going to be deducted instead of added. Then you deduct your dividends, and you come up with your ending stockholders' equity. That's what you'll see on your balance sheet. Some of the examples in the book break this out with retained earnings broken out separately, but they didn't in this case. So when we get over here to the next one, which is the balance sheet, what you're left with is assets, liabilities, owner's equity. So you write all of your assets, and then you write your liabilities, and then you bring over all of your capital stockholders' equity. One thing I want to point out on this balance sheet, this is what is called a classified balance sheet, not as simple as the ones that I had shown you in the past. And this one, you break your assets out into current assets, that is, those that are going to be used within a year. And then you break out property, plant, and equipment are broken out separately. And you can see here that where accumulated depreciation is a contract of property, plant, and equipment, and they are kept together. That's in the lecture on adjusting entries. Over here, you break out your liabilities. All we have are regular liabilities, so there's not much to say over there. But in a classified balance sheet, you put current assets, property, plant, and equipment as a separate category. Longer-term investments would be another category. Intangibles would be another. And on this side, if you had them, you'd have short-term liabilities and long-term liabilities, and then stockholders' equity. And the reason for all that breakdown is to help investors have a better picture of your company and help them to do financial analysis using lots of different ratios where they're looking at current versus long-term trends and that sort of thing. Okay, so that's all I have on financial statements. And again, the book doesn't cover very much. So I wanted to make sure that you have a good feel for financial statements. If you don't leave with anything else out of accounting, you should at least know how to read financial statements. So please pay particular attention to these. I will do a problem demonstration for you in another lecture, but this one I just wanted to get the concept down so you'd know how to approach the problems.